Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 433 on June the 27th, 2026. I'm your host, Eric, and in this episode, we'll cover the trades from last week on AMC Entertainment Holdings, Poet Technologies, Quantumscape Corporation, and Cipher Digital, and we discuss 4 new trades on Hyperliquid Strategies Inc, Rackspace Technology, NuScale Power Corporation, and UiPath Inc. Now, it's always great to hear from listeners. If you have any questions about the trades presented here or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets had a rocky week with the technology companies really leading that, but it finished up rather mild week over week. The Dow Jones Industrial Average grew 311 points, closing at 51,876 points. That's a new week over week high close for the Dow Jones. And the S&P 500 index lost 146 points, ending the week at 7,354 points. And now it's time for the topic of the week. The topic of the week is yesterday's trade. Have you ever had the experience where you see the perfect trade setup and you either make money or not? Then the next day you see something that reminds you of the previous day's setup and you place the trade that you wish you had placed the day before. You just executed the perfect trade for the day before, but it might not be the perfect trade for today. That's what I mean by yesterday's trade. When I'm analyzing my trade performance for the day, I always try to find ways that I could have improved on the profit for that day. That's a good thing. It can become bad if I try to make that same trade happen the next day. I always want to be present, trading the current move. This can even happen in the same day. You might assume support and resistance levels that have been established in the last hour will continue to hold. So you place a buy order at the support level and the stock is heading lower, assuming that you're going to buy the floor of the channel before it heads back up again. I've had that work before. I've also had it cost me a lot of money before as well. You just have to always be present. Always trade the current move. Don't trade this morning's position or yesterday's position or last week's position. Take all of the data points that you have in your analysis and place the right trade for that moment right now. All right, that's it for the topic of the week. Let's get into the review of last week's trades. We're going to start off with the covered call on AMC Entertainment Holdings, symbol A as in Alpha, M as in Mike, C as in Charlie. At the time, the stock was trading for $2.83 per share. I looked at buying stock and selling the July 3 call at 32 cents, hoping for a return of 17.31% in 4 weeks. Well, shares of AMC lost 68 cents, ending the week at $2.15 per share. The call option we sold lost 24 cents, leaving us with a net loss of 44 cents if we were to close the trade out immediately. Now, the stock price is 36 cents below the break-even price. That justifies an adjustment. However, if I roll the strike lower, my goal is to be able to remove much of, if not all, of the loss on the week. The 2.5 strike can be sold at 14 cents. That's not enough money to make it worth the change at this point. I will lean towards waiting a few days to see what happens in the coming week. Worst comes to worst, we'll look to roll the strike after July expiration. I would rather the stock rise above the break-even point and we are back in a profitable trade if possible, but let's just see what happens in the coming days before making an adjustment. Next, we have a cash secured put on Poet Technologies, symbol P as in Papa, O as in Oscar, E as in Echo, T as in Tango. At the time, the stock was trading for $12.17 per share. I looked at selling the July 12 put at $1.56, hoping for a return on capital of 13%. Well, shares of Poet fell $2.72 per share, ending the week at $9.45 per share. The put option that we sold is now in the money by $2.55. Now, if you've been assigned the stock, I would suggest selling a call option against it to create a covered call. Consider that you paid $12 for the stock per share. Your goal is to get enough money from the sale of the call option and the growth of the stock to cover the loss that you experienced on the week. If you can't do that, you might sell a far out of the money call just to capture a little bit of premium and then plan to sell another closer to the money call against the shares for August expiration, but you need to wait until after July options expire in 3 weeks. So do the math before making an adjustment and have a plan and follow that plan. Next, we have our credit spread on Quantumscape Corporation, symbol Q is in Quebec, S is in Sierra. At the time, the stock was trading for $8.04 per share. I looked at selling the July 8-7 put spread at 33 cents. That could give us a maximum possible loss of 67 cents per spread. Well, shares of Quantumscape lost 90 cents, ending the week at $7.14 per share. The out-of-the-money put spread that we sold is almost fully in the money. In fact, this put spread has 86 cents of intrinsic value in it right now. So that's not great. We are losing money on this spread so far and can certainly consider making an adjustment. Now, I would first consider selling a higher strike call spread to create an iron condor. This will not collect enough money to make it worth changing the risk right now. I would also consider turning the spread into a debit spread or even making it a 50-cent wide spread instead of $1. The adjustments I looked at were going to cost a significant amount of money to make that change. Thus, you would be locking in an additional loss, and it would increase the total loss that's possible on the trade. A better plan at this point is to know your preferred adjustment strategy and just wait for the math to work out in favor. You've heard me say that a couple times now, a few times. That's going to be what we're going to go with even the next trade. But at the end of the day, remember, we traded a spread. It has a maximum gain and a maximum loss right from the start. So if you make an adjustment that is going to increase your maximum loss, you have to really, do the math and make sure, because sometimes that's worthwhile. Like maybe you increase the maximum possible loss, but you lower the likelihood of actually taking on that loss, right? Because you push the strikes out further or something like that. But if you haven't lowered the probability of ending up with a loss and all you've done is make a change, but you've increased the total possible loss, it's not an adjustment you should make. Let's get in our final trade from last week was a debit spread on Cipher Digital, symbol C is in Charlie, I is in India, F is in Foxtrot, R is in Romeo. At the time, the stock was trading for $29.18 per share. I looked at buying the July 28-29 call spread for 65 cents, hoping, that could give us a maximum gain of 35 cents, or that's a 53.85% return in 4 weeks. Well, shares of Cipher Digital lost $3.31 per share, ending the week at $25.87. The in-the-money call spread that we bought is now out of the money, and we can look to turn this debit spread into a credit spread and then sell a put spread against it to create the iron condor. You can collect 40 cents for selling the 28.30 call spread. That would leave you short the 29.30 call spread. You can then sell the 24.23 put spread at 26 cents. This would allow you to fully recoup the money you spent on the initial trade. Of course, you still have $1 of exposure if either of those spreads finished in the money. So in this case, you'll actually increase the overall risk of the trade. We still have 3 weeks until expiration, so I'm again going to choose to lean on patience rather than make a quick adjustment. Just remember to always do the math. You guys hear me pound that every week. Do the math before making an adjustment. Even if that adjustment clears your initial loss on the week, if you just increased the possible loss on the trade, you might want to rethink the adjustment. So that's it for the review of last week's trades. We are 3 weeks away from July expiration on July the 17th. All new trades on today's show will use that expiration. We're going to start off with our covered call. We're looking this week at Hyperliquid Strategies Inc., symbol P as in Papa, U as in Uniform, R as in Romeo, R as in Romeo. The stock ended the week at $8.73 per share. I'm looking at buying that stock and selling the July 9 call at 75 cents. That could give us a return of 11.68% in 3 weeks. Well, you enter this trade by buying stock for $8.73 per share and then selling the July 9 call at 75 cents. This trade makes the most money if stock prices finish above $9 per share. The break-even price on this trade is $7.98 per share. In real terms, the stock purchase will require $873, and you'll collect $75 for selling the option. Next, we have the cash secured put on Rackspace Technology Inc., symbol R as in Romeo, X as in X-ray, T as in Tango. The stock ended the week at $5.96 per share. I'm looking at selling the July 5/2 put at 55 cents, hoping for a return of 10%. Now, you enter this trade by selling the July 5/2 put at 55 cents. This trade makes the most money if stock prices finish above $5.50 per share. The break-even price on this trade is $4.95 per share. In real terms, you'll collect $55 for selling the put option, and you have $550 locked up in case you need to purchase the stock. Next, we have our credit spread on NuScale Power Corporation, symbol S as in Sierra, M as in Mike, R as in Romeo. The stock ended the week at $10.09 per share. I'm looking at selling the July 10 9/2 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the July 10 put at 81 cents and concurrently buying the July 9/2 put for 65 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $10 per share. The break-even price on this trade is $9.84 per share. In real terms, you'll receive $16 per spread that you sell and have $34 at risk. And then our final trade on the week is going to be a debit spread. I'm looking at UiPath Inc., symbol P as in Papa, A as in Alpha, T as in Tango, H as in Hotel. The stock ended the week at $10.53 per share. I'm looking at buying the July 10 10/2 call spread for 34 cents. That could give us a maximum gain of 16 cents, or that's a return of 47.06% in 3 weeks. Now you enter this trade by buying the July 10 call for 95 cents and concurrently selling the July 10 half call at 61 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $10.50 per share. The break-even price is $10.34 per share. In real terms, you'll pay $34 to enter the spread, and your maximum gain is $16 per spread. That's it for this week's show. Thank you guys so much for listening. Hey, have a fantastic week. Don't forget that markets are closed on Friday, July 3rd, in honor of the July 4th holiday in the United States. So this is a shorter trade week, and I'll be back next weekend with a new show. So follow along, join me then. Thank you guys for following along thus far. Have a wonderful weekend and happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.